All right, and if you're a CA Inter student attending the November 21 exam or the May 22 or the November 22, this important lecture is for all of you. My name is Saurabh Mutta. I'm an educator at Unacademy. This lecture is something, a change which happened recently, and lots of students are puzzled at what that section means, what it means. I'll tell you more about it. That section is a section called 115BAC, where they've changed the rates, they've removed all the deductions. It's a very, very dangerous section, but not anymore. This very small lecture will give you a complete idea of what that section is. How do you remember it? Great shortcuts. I'll tell you how to remember it completely. By the end of the lecture you would have mastered this section. Also, it's a very short lecture, so watch till the end, and I'm going to solve a question from an examination, ICAI examination paper with applying this section. So very interesting section 115 BAC we're discussing. But before that, I just want to tell you about a really good thing that we're doing at Unacademy currently. I'm just putting it on the screen. It's a fast track course, and it's really unique because it covers everything. It covers all your subjects at group 1 and group 2. I have just completed my tax fast track course there, but you can still watch the recorded ones. And not just that, we have everyone covered here. It's for November 21 exams, and these are the list of educators from Yeshas and Unacademy who are doing this together. A fast track course which covers everything. I'll tell you what we did in our tax course. We covered all the concepts, be it GST, be it Income Tax Act. We covered it with lots of shortcuts. We studied every section, every concept, and the cherry on the cake, we solved a lot of examination questions in that course, which is now over, but it's recorded and you can watch it. September, October, November are 3 good months. Very important fast track course for you to get it done really well for your exams. Also, once you subscribe to Unacademy, of course, you get multiple benefits. One subscription gets you multiple benefits, just like there is one GST for so many taxes. Just like that, Unacademy is solving your one subscription, multiple benefits. If you subscribe, you get 2 months extra subscription free if you subscribe for 12 months. And of course, if you use the code YESHAS, you get that benefit. So use that code, subscribe, watch the fast track course. Really interesting, covers each of your subjects. Some of them are over, like tax is over, but you can always watch it recorded, and you can watch it as many number of times. So no restriction there on the number of views that you want to have. So this one is really interesting. Go for it. Use the code YESHAS and take the maximum benefit. All right, coming back to 115 BAC, let me tell you a little about it, what all there is in it. Let me tell you just right away, let's attack it. As the promise is, watch till the end and you will master this section in no time. So what is this section and why did they introduce it? Let me give you a little idea about all of that and more right away. This section is section 115 BAC. I have a shortcut to remember this. It's a better alternative choice. Better alternative choice. That means, guys, as the name suggests, it's a choice. It's not compulsory, but in the exam they say Mr. X has done this, and in the end if they say that he has opted for 115 BSc, you have no option but to solve it for this. But let me tell you why this was introduced first. Guys, till now we know individuals and HUFs are taxed on some slab rates. I'm just putting the slabs and I'm telling you what's wrong with these slabs. Up to 2.5 lakh rupees, your percentage is 0. From 2.5 lakhs plus to 5 lakhs, you're taxed at 5%, which is a nice number from 0 to 5%. But suddenly the slab becomes bigger from 5 lakh to 10 lakh. Not just the slab has become wider, the percentage has jumped 4 times to 20%, which for a person, it is a steep jump. And then of course, from 10 lakhs again, plus any amount, it's taxed at 30%. So if you see there's a steep jump from 0 to 5, it's okay. From 5 to 20 is a 4 times jump, and from 20 to 30% again a big jump. So the rates are very erratic. Also the slabs, the first slab is 0 to 2.5 lakhs, the second slab is 0 2.5 lakh to 5 lakh, but the third slab is suddenly 10 lakhs, and the fourth is unlimited slab. So these rates were slightly erratic, and hence the government said that, do you want a better available choice? So we will give you a better available choice under section 115 BAC, guys. The section is better available choice. So it's for whom? It's only for individuals and HUF. So in the exam, if it's an individual, he can opt for it. If it's an HUF, that HUF can also opt for it. I'll tell you more details about how to opt, etc. But first, let's see why should we opt for this? Because, guys, there are 3 main changes. 3 main changes. Let's have a look. What's the first change? The first change, and the very good change, it's something that will make individuals and HUFs really happy, as a smiley on the screen. It'll make you really happy because the slabs are now very, very uniform. The first slab is 2.5 lakhs. The second slab is 2.5 lakhs plus to 5 lakhs. The next slab is 5 lakhs plus to 7.5 lakhs. As you see, the slabs are now uniform of 2.5 lakhs. Next slab is 7.5 lakhs plus to 10 lakhs. No prizes for guessing the next one. 10 lakh plus to 12.5 lakhs. 12.5 lakhs plus to 15 lakhs, and then 15 lakhs plus. So if you see, every slab, except of course 15 lakh plus, every slab is 2.5 lakhs. So have they made it a uniform thing? Yes, they have made it very, very uniform. All the slabs are now uniform. Is it a good thing? Yes, it's a good thing. Instead of having, erratic jumps in the slab, it's a very, very systematic slab. So you would opt for this because of this reason. One reason, there are three main reasons. One is this reason you could opt for this 115 BAC. The second reason is not just the slabs, even the rates have been changed, and the rates are now very, very systematic and smooth. The first one obviously is 0. That means there is no tax up till 2.5 lakhs. Guys, one more thing you have to remember, there is no higher basic exemption limit if you choose for this. I'm just writing down the details right away. So you should know that there is no higher basic exemption limit for this. I'm removing this old method, which is still there. The old method is still there, guys. So what is not there in this? If you opt for this, no higher basic exemption limit. So no matter if you're 6 years, 60 years, 80 years, or 800 years, you'll still have the same slabs. Coming back, the slabs are systematic. Next, from 0%, next is 5%. Steady increase. Next is 10%, not 4 times increase. Next is 15%. Next is 20%. Next is 25%. And finally, it is 30%, guys. Here, see the increase, every increase, and you don't have to buy hard this, honestly. It's a very systematic thing. From 2.5 lakhs, keep increasing 2.5 lakhs worth of slabs. And here, on the other hand, you have to increase the rates by 5% till you get to 30%. It's a very, very steady, smooth increase. So at both ends, guys, there is a lot of uniformity. So uniform slabs and uniform rates are really, really nice. Are they good? I'm sorry. So both these things are excellent and they are very, very good. Both these things should make you really happy. But every story has two sides. Every coin has two sides. And there's a Chinese proverb which says yin and yang. That means there are two sides to everything. And here also there are two great things. But the third one is not the best thing to happen. I'll tell you why isn't the best thing to happen, but still people might use it. That in this, there are a lot of deductions which you cannot take. There are a lot of deductions which you are not eligible to take if you opt for this scheme. So two great things. One thing which is not that great, but how is it not great? Let's see how is it not great and which are the deductions that you can't take. I'm just putting it here. I'm moving from here. I'm moving slightly below to tell you which are the deductions we cannot take. So two great things, and these are the deductions that you cannot take. Guys, while we discuss deductions, let me tell you, there is no change in the income. So whatever incomes you're taking, example, you've given a house on rent, example, you earn some salaries, example, you have a PGBP, example, you have a capital gain, you have IFOS, there is no change in the income, only deductions. A lot of deductions are not allowed, and these deductions have to be systematically taken. So we'll go headwise. And we'll see under each head which deductions are not allowed. As you're by-hearting this with me, not your understanding, but that's okay. You're by-hearting with me. That's the agenda for my session. We'll finish this completely. We'll do a question on this, and that's where you'll know that you know this section really, really well. So deduction, we'll see headwise. The first head I'm going backwards is IFOS. In IFOS, you know, there are income section 56, there are expenses section 57. But in those expenses, in those deductions, one deduction you will not get, that is the family pension deduction. If you don't recollect, let me tell you, family pension deduction is basically whatever family pension is basically when you are no more, your family gets pension on your behalf. And in that case, they get a deduction of 1/3 of the monthly pension or 15,000, whichever is less, but that deduction you will not get. So family pension deduction you will not get. That's the only deduction you will not get in IFOS. Next. In capital gain, if you've been my student, guys, our shortcut is ATSCP. And in capital gain, you take the sale consideration and you minus the expenses. No change here, no change, absolutely. So in IFOS, just one change, that family planning pension deduction you will not get. In capital gain, there is absolutely no change. Let's move to the next one, which is PGBP. Guys, PGBP, there are a couple of changes, and hence I have a small shortcut to remember those deduction shortcuts. So in PGBP, what is not allowed is given in a shortcut called additional scientists developed awesome Covaxin. So since we are in COVID season, I've given it a COVID touch here. Additional scientists developed awesome Covaxin. They developed an awesome Covaxin. You know, it's a great vaccine which everyone's taking. So additional scientists developed awesome Covaxin. These are the things that you will not get in PGBP. Be very, very careful. Additional depreciation. I'm just writing it here. Additional depreciation, which is a section called section 32(1)(2)(a), 20% additional. If you remember, if you buy plant and machinery and if you're into manufacturing or generation of power, you get 20% one-time additional depreciation. If you put your asset to less than 180 days, then this year half and next year half, is that additional depreciation you will not get. Next, if you remember scientific research, if you remember my story, the surgeon used to give checks for scientific research to colleges, to universities, to IITs, etc. So in-house scientific research you will still get, but scientific research deduction under section 35, but only the outsiders part. Outsiders means when you would donate to approved national scientific associations or to companies whose main object was scientific research, or to USIN, if you remember the example. So those outsiders you will not get. In-house you will still get. So additional scientist. Next, you remember specified business? Specified business, our shortcut was section 35AD, also develop. In this, you get 100% deduction of the capital expenditure you do, or even if you've done it before and you capitalize it now, you get 100% deduction. But unfortunately, you don't get this. So this 35AD you don't get. But because they didn't give you 100%, don't worry, at least depreciation you will get. So additional depreciation you won't get. Scientific research outsiders you will not get. Also develop you will not get. Is awesome. There's an awesome shortcut. There is section 10AA, which you know, awesome area, whereby you go to an SEZ and you start manufacturing or you start providing services and you export. The government loves you. And for the 15 years, first year 100% of export profits, next 5 years 50%, and last 5 years again 50% of export profits subject to condition, you get that deduction. Unfortunately, that you will not get here. And there are some deductions where you spend money on rural development, on skill development, which are mostly discussed at CA final level. 35CCC, 35CCD. These deductions you will not get. So these are the deductions that you don't get in PGBP. So this Covaxin is basically for development, and this is the C series, and hence I've written C, Covaxin. So additional depreciation you will not get. Scientific research outsiders you will not get. Also develop you will not get. 10A awesome area you will not get, and these C series deductions you will not get. Otherwise, guys, life goes on. Usually you will get all the deductions. There are 1-2 more, but that's at CA final level, like site restoration fund, etc. So at CA inter level, you don't have to worry about this. So these you will not get. So PGVP you will not get this. Capital gain no change. IFOS family planning pension deduction you don't get. Next, let's move ahead, which is the next thing you don't get after PGVP, guys. The head is income from house property. And income from house property, just one thing you don't get. If you remember, income from house property, if you let out your house or self-occupied house, you get 3 deductions: municipal tax, 24A and 24B. A is ad hoc and B is on borrowing, the interest deduction. As you don't get the interest deduction, but only for SOP properties. So 24B, interest deduction, only for SOP properties. Only for SOP properties, you don't get that. So that one you will not get, only for SOP, guys. If you're LOP, you will get unlimited. If you're SOP, remember 2 lakh or 30,000 maximum, that you will not get under this scheme. So in IFOS, capital gain, PGBP had major ones. IFHP, capital gain, IFOS had very, very simple ones. So these are some you will not get. Going to the next page, guys. Going to the next page. Just making some space here. So these are some things that you will not get. Now let's see ahead in salaries head. So if you go headwise, it's very easy to remember. You don't have to push yourself. to by heart it. Just go headwise, and in each head which is not there, you should just understand, and that makes it much easier, much easier. All right, moving ahead, just 1 second. Just making some space. Perfect. Next, guys, is a salaries head. Next is a salaries head. So let's see, in salaries head, we don't get what? Guys, salary is a major change. In salaries, if you remember our example in salaries, guys, there was salary, allowances, and perquisites. This, you would deduct standard deduction of 50,000, entertainment allowance deduction only for government employees, and professional tax deduction. All these three deductions you don't get. So I'm just writing down standard deduction, you don't get. Entertainment allowance deduction, you don't get. And professional tax deduction, you don't get. So a good SEP, all three you don't get. Yes, all three you don't get. Plus, guys, if you remember, there was HRA under section 1013A, house number 1013A, if you remember, that HRA you won't get. Unfortunately, even that you won't get. Then if you remember special allowances, where you are given helper, uniform, if you remember the shortcut, HRA can demotivate, hurt, heartbeat, where we have conveyance allowance, helper allowance, daily allowance, uniform allowance, research allowance, all those allowances you will not get, except, I'm just writing exception, blind can do tours. Only these you will get. I'll come to those. Only these you will get. So I repeat, guys, entire SEP you will not get, channel deduction you will not get, entertainment allowance deduction you will not get, professional tax deduction you will not get. In fact, in salaries you don't get any deduction except these four. 1013 HRE you will not get, 1014 all those special allowances you will not get deductions. You will also not get LTC. Remember LTC, where you, your spouse, and 2 children can go abroad twice in a block of 4 years. That also you will not get. So these all deductions you will not get. So which are the ones that you get? You will only get these 4 deductions. These 4 come under allowances. If you remember, guys, if you're blind, deaf, dumb, handicapped. The government says if you're blind, deaf, dumb, handicapped, and your employer, whom we call as master, if your employer or master is paying you an allowance for transport, you can minus whatever you spend, that you will still get. Conveyance, if your employer gives you money for conveyance and you spend that amount, that you will still get. Daily allowance you will still get, and tours and transfer you will still get. Guys, remember, conveyance from your house to office and back for you is not allowed. For blind people it's allowed. Blind, deaf, dumb, even from house to office and back is allowed. For you it's not allowed. All these amounts, the amount you spend, for blind people they get 3,200 per month flat. For us, conveyance allowance, daily allowance, and tour allowance, depending on how much you spend, you get a deduction. So only these 4 deductions, guys. We had studied so many deductions in salaries, and none of these deductions are there. So none of these except these 4, only these 4 deductions are there. Blind can do tours. Blind can still do tours because they still get the deduction. So that is the end of heads. We did all 5 heads, guys. In each head, go systematically in each head, which deduction is not there. Repeating, IFHP, SOP interest is not there. IFOS, only one family pension deduction is not there. Capital gain, there is no change. In PGBP, additional scientist developed awesome co-vaccine is not there. And in salaries, nothing is there except blind can do transfers. Now, guys, if you remember, after all the heads, we did clubbing. Clubbing of income, where you transfer your incomes to someone else, or your minor children's income, it comes back to you and it's added in your hands. In that case, if you remember, per child whose income is clubbed, you get a deduction or exemption, under section 1032. Very small, 1,500 maximum per child whose income is clubbed. That you will not get, of maximum 1,500 per child. 1,500, that you will not get. Very small deduction you have to give up here. So in clubbing, only one. Yes, in clubbing, only and only one. Next, in set off chapter, guys, set off and carry forward, just like the income tax taxes your income. If you have any losses, they first allow you to set it off. My example was a blood bank example, where you ask for blood within the family, then you go outside and then you come back. So set off and carry forward is allowed. It's a great thing, but some set off and carry forward is not allowed. Let me tell you which are not allowed. In PGBP, whatever you saw, additional scientist developed awesome co-vaccine, in relation to these, the expense is also not allowed. And in relation to these, if there is any additional set off and carry forward, even that will not be allowed. I'm sorry. So like additional depreciation, if there is any carry forward because of additional depreciation, that will not be allowed. If there is any carry forward because of scientific research, that will not be allowed. If there is any carry forward because of specified business, that will not be allowed. Carry forward under 10A never happens, and carry forward under C series also does not happen. So if these are the things, it will not happen. In business, these deductions are also not allowed, and in relation to those, the set off is also not allowed. So it's very easy. You don't have to buy hard, guys. Set off is not allowed. Carry forward set off is not allowed for those deductions. If in that year it's not allowed, of course, carry forward will also not be allowed. And just one more, in IFHP, if you have a SOP property, you cannot take the interest deduction. We just discussed that this is not allowed. If you're a house property, which is self-occupied, if you remember, you could take 24B deduction, interest deduction up to 2 lakh or 30,000 as the case may be. We have shortcuts to remember all of that. But even that is not allowed. And if that is not allowed, the carry forward in relation to that is not allowed. So carry forward of IFHP, which is SOP, that is not allowed. So again, clubbing only 1032 is not allowed. Set off and carry forward, and all these expenses which are in relation to PGBP, where the deduction is not allowed, the carry forward is also not allowed. In IFHP, again, SOP, the deduction is not allowed, the carry forward is also not allowed. After that, guys, I'm looking at a chapter called exemptions. In exemptions, if you remember section 1017, where MPs and MLAs used to get a lot of allowances. MPs and MLAs, just telling you guys, MPs and MLAs earn salary. Their salary is taxable under the head IFOS. Why? Because they don't want to be called employees, so they don't have tax on the salaries. Their salary is taxed under IFOS, and their allowances were always exempt. But that exemption goes away. It's not given if you opt, if the MLA or MP opts for this option, it's not allowed. So going headwise and going chapter wise, we did all the 5 heads, and we did clubbing and set off, and we're now in exemptions. Next, guys, GTI, there is nothing like GTI. There is no chapter like GTI. Then there were deductions under chapter 6A. If you remember 80 series, 80C, 80D, 80, none of them are allowed. Right from 80C, where we had a shortcut to remember the entire 80C. If you've not, then watch the fast track course, guys. Really helpful. It'll help you summarize all of this very, very well. But all the 80C to 80JJ, and all these were under chapter 6A. Amongst that, only 2 are allowed. Let me remind you which 2. 80 CCD. CCD is National Pension Scheme. If you remember, National Pension Scheme, the government had decided about that scheme at a CCD coffee shop. That's how we remember. Under 80 CCD2, when your master or when your employer contributes and you get a deduction, maximum 10% or 14% of salary, that is allowed. Plus 80 JJAA, job, add, only these 2 are allowed, only these 2. Remaining else, nothing is allowed. So here we'll see the opposite, which are allowed, only these 2 are allowed. The intention is the government wants people to at least contribute some part to NPS, and hence employers' contribution is allowed. And the government wants people to have jobs, guys. Remember the job added. So hence these 2 are allowed. Otherwise, guys, no deduction is allowed in deduction under chapter 6A. No deduction is allowed. So we've covered almost all the chapters, and we've seen that none of these deductions are allowed. Anything else after that, guys? That's about it. So just summarizing the different heads under which deductions were not allowed. I'm just summarizing it here. IFOS, family pension deduction not allowed. Capital gain remains the same. PGBP, additional scientists develop awesome coaxial. Not just this, even the set off carry forward in relation to these are not allowed. IFHP 24B, not just this, even set off carry forward in relation to this is not allowed. And salaries, nothing is allowed except blind can do towards. Clubbing 1032 is not allowed. Set off, we've already discussed. Exemption 1017, that exemption is not allowed. So MLAs, MPs are not going to be really happy with this. Deductions, nothing is allowed except 80 CCD and 80 JJA. Guys, that is how this section is. And by the way, we're done with the section. I'll just tell you some really small details about this. So there are 3 things that happen here. There are 3 things, just summarizing. There are 3 things. One is the slabs become stable, the rates become stable, and the deductions you have to give up a lot. But honestly, guys, not too many people take scientific research, not too many people take additional depreciation, so they're okay to give it up. And now, how do you exercise? How do you additional points? How do you exercise this option? If you're an individual HUF, only those can opt, and you can opt for the option even just before the day you file your return. So during the year, even if you don't opt, no one wants to know whether you want this option or not. Don't worry. But after the year ends and your return filing date comes for individuals, If they are not subject to audit, then 31st July. If they're subject to audit, then 31st October. Same for HUFs, 31st July, 31st October. Then on those dates, just before you file the return, so it can be opted anytime. Yes, it can be opted anytime till return of income you file, till return of income filing. So after you file your return, you cannot, of course, for that year. So till return of filing, that means you don't have to opt it at the start of the year. Second, but if you're a salaried professional, guys, if you've done TDS chapter with me or anywhere else, you know salaried professionals, when you get a salary, there's a deduction or TDS deduction under section 192. Because of that, your employer or your master should know whether you want to opt for this. So salaried people are suggested, that they should opt for this if they want to, and tell their employer that they're opting for it. But one person for whom there is some peculiarity are those people who have PGBP income. So if you have PGBP income, then no problem, you can opt anytime, but you can opt only once. That means if you have PGBP income, let's say you have some business or a profession, you're a surgeon or a chartered accountant, or you have a business of selling something or buying something, then you can enter into in this once. Once you enter, and if you don't like this and you get out, you can't enter again. Unless business is over, now you don't have business, then you can again enter. But till you have a business and profession, you can only enter once. Example, if a surgeon enters into it once and checks this house, and if he doesn't like it, he comes out again, he cannot enter. So the door closes and it opens only once, and once you come out, it door closes forever. Also, one additional point, guys. We had seen something called alternate minimum tax, where the government says that, listen, you're supposed to pay so much tax. You're supposed to pay 100, but why don't you pay 150? Why am I paying extra? Because the government says pay alternate minimum tax. And don't worry, you get a credit of that 50, which can be carried for 15 years. That is something that we had seen in alternate minimum tax. Good part is, if we opt for this, if you opt for this provision, better alternative choice, then AMT will not be applicable. So no AMT when you opt for this. So good part, flat rates, steady rates, steady slabs. No AMT, you can opt for it anytime you want. But the bad part is a lot of deductions you have to give up. This is the better available choice. I'm looking at one question from the CA Inter November 20 exam. And as we discuss this examination question, guys, we have to figure which deductions we can take or not take, assuming Mr. Ganesh has opted for 115 BAC. So let's do this, guys. From the following particulars furnished by Mr. Ganesh, age 58 years, a resident Indian for the previous year 1920, you are required to compute his total income. All right. So guys, while we read it, I've twisted the question such that he opts for 115 BAC. In the exam, if they say that what if he does not opt, so then calculate normally. And if he opts, then what you should do, we'll see. He occupies the ground floor of his residential building and has let out the first floor. So there is one SOP and there is one LOP. In LOP, there will be no change at all. So LOP is just what you know. You take expected rent, actual rent, you minus unrealized rent, all of that. Nothing changes. In SOP, you will not get 24B. If there is any interest, you will not get that. That's what in the first one. Next, he owns an industrial undertaking established in an SEZ and which has commenced operations during the financial year 17-18. So guys, he's in an awesome area, SEZ. And if you know you're an SEZ, once you offer yourself to tax, then you can take advantage of section 10AA. That is 100% of your export profits, or 50% or 50% you'll get. Since this is a very close year, you're in the first 5 years, so you get 100% reduction. But unfortunately, if you're opting for this, the income will be taxed, but this deduction you will not get. Guys, there is no change to the income. Income is still taxed, but only this deduction you will not get. Let's move ahead. He received royalty from a book authored by him. Guys, if you write quality books, the income that you get will be taxable. So he received royalty of 2,88,000. The rate of royalty is 18%. The royalty expenditure was 40,000. So to his income, guys, you will tax 2,48,000. Why 2,48,000? Because 2,88,000 is your income, and even any income in the Income Tax Act is income minus expenses. So 40,000 is the expense. So 2,48,000 will be in your IFOS income. But in relation to royalty, you get 80 QQB. If you remember, maximum 3 lakh. But unfortunately, if you opt for 115 BAC, you get no deductions except 80 CCD2 and 80 JJA. Received interest of 40,000. So you will add under IFOS another 40,000 from saving bank interest. But if you remember, guys, there is a section called 80 TTA where you get a maximum 10,000 rupee deduction, which he should also get because he's 58 years. Or if you're more than 60 or more, then you get 80 TTB. Or unfortunately, under 115 BSc, you will not get this. All right. He sold his vacant land, so no change in capital gain. Capital gain is the same. AOP BOI, nothing like that. No problem with this. So only and only thing is that when you opt for 115 BAC, you don't get a lot of deductions. The other deductions you will not get. I'm just summarizing it once again. IFOS, family planning deduction, you will not get. Capital gain is the same. PGBP, you will not get. Additional scientist developed covaxin. Capital gain is just the same. IFHP, you will not get 24B interest deduction for SOP. Salaries, you will not get a lot except blind can do transfers. Next, clubbing, you will not get 1032. Set off, you will not get all these deductions. Set off, you will not get. In exemptions, you will not get 1017. And in deductions, you will not get any deduction except 80 CCD2 and 80 JJA. Besides that, guys, good thing is you can opt in anytime before return filing. You can opt in, opt out any number of times unless if you are PGBP. You can that AMT, alternate minimum tax, is not applicable to you, and you're subjected to very nice slabs and very nice rates. Be very careful. This would something be very, very important in the exam. Do well. I hope you understood this, guys. Make sure that you're revising this often. I hope you understood the lecture. Watch out for more such revision lectures soon. Join the fast track course and see you guys at the other end after November 21. All the best. Thank you.